Hello everyone, my name is Andy. Today is Sunday, October 8th. Time is around 2:15 p.m. GMT, and we will have a look at the S&P 500 futures on the Wanda platform. It's Sunday, markets are closed, but we will have a look at the higher time frame, and we will also prepare the lower time frame for Monday, October 9th. So here we are looking at the weekly chart, and my take on the S&P 500 is that we made a wave one up right here. 5 waves, we have some divergence here. Then we came down as a wave two, A, B, C, corrective structure. We touched the zero point 0.5 FIB retracement, and from here we started another wave up, and I believe this is here a wave one. We are currently working on a wave one, which is then part of a higher degree wave three right here. So this looks all quite bullish. However, as you can see, for the moment, we broke this RSI trend line here, this upward cycle, and it looks like we started a downward cycle right here. So it's important to consider bearish scenarios as well. Like this one looks bullish from here, but because we are in this downward cycle here in the weekly, it is definitely worth considering some bearish scenarios. And so the most bearish scenario I can imagine at this very moment would be that this wave two here was not in yet. And what we would get then is a flat structure from here. So then we came down here in 3, 1, 2, 3 as a wave A. Then this here should be something corrective as a wave B, for instance, like an A, B, C structure. And then from here, we could actually go down in 5 waves as a wave C. 1, 2, 3, 4, 5 into this wave 2 area. So instead of being the wave 2 being in here, then our wave 2 will be in somewhere right here. This is the most bearish scenario at the moment. It is a scenario that is possible, but yeah, I don't think we have to spend much energy on this right now because current price action is here, the low is here, so there is quite some separation, and I believe there are better structures to look at or more plausible bearish scenarios than the very bearish one in the weekly. But so in the weekly, it would mean that we then get here a 1-2 setup, and we go down as a wave 3 in the wave C. So most bearish scenario. Then if we look at the daily, and so here, yeah, you can see my scenario in green as the bullish one, but just let me elaborate on another bearish one. Another bearish one could be, like, as you see here, we are working on the wave 4. So here we are in the wave 4 area. If we take the length here of our wave 3, then we know that the wave 4 should go here into the area between the 0.146 and the 0.618 FIB extension. And so we are in this area. So that could mean that the corrective move here as WXY is finished. However, it could also be that this first WXY is just part of a larger WXY, so that we get WXY as a wave W, then 3 waves up, 1, 2, 3 as a wave X, and then again 3 waves down as a wave Y, 1, 2, 3. It is possible, but as you can see, like, space is quite limited for this kind of scenario. If another if another corrective Y leg down has to fit into this area, possible but less plausible, I think. And so, excuse me. And so, for another bearish scenario, we have to go to the 4 hour. So we are considering this bearish scenarios because in the weekly we are in a bearish cycle. However, it is possible that this here is just a wave 4. And then this is actually very normal behavior to break this RSI trend line in a wave 4. But then what should happen soon is that here also this downward cycle in the daily, that we break this and that we start to go up again. So then this would be a wave 4, and then we can do the final wave 5 of the wave 1. So here also in the daily, it's important to now we are testing this downward cycle, this downward RSI trend line, but we have to break it. And then we go or we come to the 4 hour, and actually here there is another bearish variant that would fit as a wave 4. And then, so now you can see I labeled the wave 4 as a WXY structure. And so we are in the wave 4 area, and we also reached the equal leg area. If we take the length of the wave W, the length of the wave X, then you see that we are reacting here from this area between the 1 and the 1.618 FIB extension. However, it would also be possible to consider an ABC here instead of a WXY. And if we have an ABC here, we are working on the wave C as a wave 1, 2, 3, and then actually a fourth and a fifth wave would fit into this wave 4 area. The reason that I do not really like the ABC structure right here is this first A leg should be interpreted as an impulse, and we have quite some overlap to interpret this fully as an impulse right here, this structure. For me, this looks more 3 waves, as it is labeled now as an A, B, C, instead of 5 waves. Like, the most obvious thing, in my opinion, is to see here 3 waves instead of 5. I do not really know where the fifth wave would be situated, but unfortunately, sometimes what we get in reality compared to the Elliott Wave theory, it is not always so obvious which structure we have exactly. But for me, this tends more towards 3 waves than 5 waves. So therefore, I chose to label this as a wave W instead of a wave A. But if this would be, for some reason, a wave A, and then we can have a wave B and a wave C here, then actually in this wave C structure, then a fourth and a fifth wave would still fit. Then we have here in the C wave that started here, a wave 1 in red, a wave 2 up right here, then a wave 3 down as an impulse, clearly, and then this move here could be a wave 4 to the upside. And then this wave 4 should be followed by a wave 5. And that would mean that we see more downside while still respecting our wave 4 area. So even if we take out this low, it could mean that we are still doing, or that we will still get the wave 5 to the upside. Like, the S&P 500 is less clear in this. So we will have to see what exactly we get, but I prefer the WXY scenario. And so I was talking here about a potential wave 4. We reached the wave 4 area, and this area we can find by taking the length of our wave 3. Then the area here between the 0.146 and the 0.618 FIP retracement is the area where we typically go for a wave 4. And so, as you can see right now here on Friday, it nicely stopped at the 0.382 level, which is a very common level for a wave 4. So, like I would say, still two kind of equally valid scenarios. Although I have a little. Also, I prefer a little bit more the WXY than the ABC, but the ABC would not really invalidate the idea of a wave 4 down. So here on the 4 hour, like it looks like we are starting here an upward cycle. And so then we have to see where exactly we go with this upward cycle. Does it mean here on the daily that we will also here break the downward cycle in the daily, and then in a later stage going back here as a fifth wave ending with divergence? Therefore, we need more data, but this is something which is definitely possible. So now on the lower time frame, we have a structure here that could be finished as a fifth wave, and now we have to see what exactly we will get next. So now we are this first reaction to the upside is good, but what we have now is 3 waves. So this can still be interpreted as a corrective move, A, B, C, like this, reaching the wave 4 area. So as long as we do not get a fourth and a fifth wave, this is not an impulse. An impulse should have 5 waves, and so far we only have 3 waves. So what could follow after 3 waves is indeed for the S&P this other leg down as an impulse, as a fifth wave. That's definitely a possibility, something that we cannot exclude yet. What would favor the bullish scenario, so more upside? Then what needs to happen? First of all, we need 5 waves up. So after this 1, 2, 3, maybe I will put it on the chart, or did I put it in the 15-minute? Yeah, it's on the 15-minute right here. So what we need to get here is a 1, a 2, a 3, but then we still need a fourth and a fifth wave. And then the real test for the S&P will take place once we start to correct this structure up here, this potential wave 1. Then if we go down as a wave 2, then we should hold this low. So now this low has quite some importance in the sense that it can give us an indication that we start the upward move from here. However, taking it out does not really, for the S&P, invalidate the wave 4 scenario, in the sense that we still have space for more downside as a wave 4. And if we count the corrective move as an ABC instead of a WXY structure, then here this fifth wave would also actually be part of the plan. But then this is really the limit, I would say, for the S&P 500. If we do not hold it from here, then I think we have to seriously consider the more bearish scenarios. Okay, that's my analysis for the S&P 500. If you enjoyed it, please like, subscribe, comment to support my work. And then I see you back on Tuesday for another analysis of the lower time frame. Have a nice day. Bye-bye.